I'm asking us to start this discussion by looking at some of the trends and investment opportunities
in 2000.
in the market, if you can hear me.
Yes, we had a few hiccups in 2009, 2010, and we are glad that we have been able to overcome such difficult times, which was actually a global trend at that time. But apart from that, our Nigerian stock market has been doing very well, fantastically well, to the extent that the growth rate in our market is ranked as #2 in the world. And you can imagine such a situation. So looking at it from that angle, uh, for any inspector that must have entered the market between 2012 and now, have made about 500% of his investment. And that's a remarkable feat for any investor who is operating in our market. So I believe going forward, based on the situation around the world and our current exchange rate, a lot of investors are already eyeing our market, and we believe they will do very well in terms of performance between now and the next 2 years at least.
Okay, so the market is quite stable right now, but for investors, how do they know, or those who are intending to put their money in there, how would they know that the market is doing well, apart from what they see in the stock market, interpreting it? So the companies, various companies that are enlisted in the stock market, their reports, how do investors come by these reports, and how can they interpret what the report is saying to know, okay, this is the company that I've invested money in, this is what it is making, so that means that at the end of maybe the year, I should be smiling because I would receive lots of dividend?
Yes, if you look carefully, you will find out that most of the national dailies, but I will start from that, most of the national dailies on a daily basis give stock market report that people are supposed to be aligning with to do their investment decision. Secondly, some of our electronic media stations, particularly your own channels and a few others, have a segment designated for stock market report, and it gives you a summary of performance of companies for the period in question. And that is also a method by which the regulators have designed it in such a way that people can get information about the market, what performance the companies are recording. And we also find out that for the stock exchange, there's also a segment of the stock exchange website where you can get information on a daily basis of reports that have been churned out by the corporate organizations, quoted companies in the stock exchange. And lastly, some stockbroking firms have their own website where all these reports are published for the information of the viewing public. And so through that means, you are able to get information regarding all these companies and how well they are doing. In terms of analysis, not everybody's knowledgeable or very experienced in terms of analysis. So people are encouraged to register with stockbroking firms from where information can be given to them by experienced hands and advice, as the case may be.
All right, looking at the recent figures released about the top gainers, I would like you to talk about some of the best stocks, for anybody thinking of investing in that. What are the viable stocks they can put into consideration?
Yeah, there are quite some of them. You see, having to invest in the stock market has two primary considerations. And that is why you need to talk to a registered stockbroker who will give you more information. If certain considerations are given before an advice is given you, particularly your age, your level of risk tolerance, as well as your understanding of the market. And these are things that people will have to put at the back of their mind in taking a decision. A lot of people just dabble into the market without knowing the nitty-gritty of the market. And that is why sometimes they have their fingers burnt. But we encourage everybody, every investor, to look inwards by studying the market trend, either by reading or consulting your stockbroker. But in the main, your risk tolerance determines what you need to invest in. If you are at the age of 20, 25, and you are investing in the market, you are encouraged to have a mixture of new entrants, high-risk stocks, and the rest of them. And if, as you grow older, your appetite for cash becomes heavier, and as it becomes heavier, it therefore means that you'll be looking at those stocks that will give you high dividend yield at the end of the period. And as such, you can invest in such organizations. Secondly, there are some stocks that we encourage people to invest in, particularly banking stocks that are doing very well in this current dispensation. And some of the others are the technology stocks. So the likes of GT Bank, Zenith Bank, Access Bank, UBA, and some others are investable areas for any would-be investor. And the likes of MTN, plus Nestle, and some other companies like Nigerian breweries that will always give in dividend. Then that does not remove us from remembering the fact that there is one holy Nigerian company that is a group of companies that are doing well. That's the Dangote Group. These are companies that you can invest in and smile home at the end of the year.
Okay, let me take you back to earnings reports. So what are some of the things that any report is supposed to include? And the second part of my question is this: how do you authenticate an earning report? There have been instances where it was said that some companies were actually over-declaring, and some companies too, when they're even going towards a bankruptcy, do not actually reflect that in their reports.
Yes, that is the more reason why we usually will look at companies clearly before we dabble into them. You need to look at the management structure of the organization, the board of directors, how properly constituted are they, and you find out also that the Securities and Exchange Commission, in setting up the minimum operating standard as well as the stock exchange, also at board level there must be an independent non-executive director to help modulate the excesses of the executive directors or directors who have direct interest in such organizations. To go into your question, the earning reports, the key thing that you look at actually is the revenue of the company, the gross, the profit before tax. Then you look at other inputs into it, particularly administrative costs and some other extraordinary income or losses that may have occurred in organizations. And after looking at all that, then you now look at the yield, the dividend yield that comes to you, comes to the shareholder at the end of the day, and the dividend payable. And companies are not discouraged lightly from declaring dividend out of losses. And so when you find a company not doing well and declaring large dividend, it shows that's a signal, a red flag, and you must run away from such organization. And when you are in doubt, you consult your stockbroker.
All right. I would like you to educate us on what should constitute the details of an ideal earning report. What are the details or specifics that should be there to ensure that it will guide investors? Talk to us about these details of earning reports.
Yes, in any given report, in some cases, the financial statement does not specify as per the statistics that goes with the earnings report. And you know that there's what they call the price earning ratio of an organization. That's the price to the earnings of the company as it stands. We'll also have the yield, the dividend yield, and we'll also have other considerations that you'll have to look into in determining whether the earnings report is sound enough or otherwise. So in the main, the price earning ratio and the dividend yield is key in determining the performance of the company.
So what is the role of the Nigerian Stock Exchange in earning reports of companies? Does it have a role in this?
Not necessarily. The stock exchange is a market, though self-regulated, and it has its own minimum operating standard for every operator in the market and every issuer in the market. However, it is a platform. Since they have provided the platform, it is now left for the investor and the issuer to do the needful. And what do I mean by that? The job of the exchange is to make provision for you to operate in the market. And they also tell you what time to present your reports. For example, they can say to you, if after 3 months of the financial year end, your result is not published, then you may be placed on some form of suspension, pending when you bring it in. And if you are not able to bring it in, you must give information in advance to the investing public why it is not ready. However, whether you make a loss or profit, or you are not really operating, the key thing that the exchange needs to get from you is to give them updated information concerning your operations. And apart from that, any other thing regarding profit, loss, or whatever, it's not, you cannot hold the stock exchange accountable, and they cannot come to the company to ask for such information.
All right, from your experience, what do you think could be the likely impact of any reports on prices of stocks? If that is something to go by, what might likely be the impact on prices of stocks?
Yes, it has a direct relationship. Anybody who, for example, you are a trader, give an example of a petty trader now. And the petty trader deals in making bean buns, that's akara, and local balance. If you come to the akara woman or man and you buy akara and it's too peppery, the next thing that happens is that you will not go back to such a person. And so it is in the stock market. If your performance is not good, you do not expect people to come and patronize you. And if people are not patronizing you, it means that your stock is not flowing or it's not liquid enough for the market. And when that happens, it therefore means that the demand for your stock will no longer be there. There will be reduced demand. And when there's reduced demand, it will directly affect the pricing of your stock. And that's the cycle it goes.
So, can an investor by themselves use an any report to make decision, or would they need the help of a stockbroker or a stock market analyst, for instance? Is this something that one can by themselves make judgment of looking at the any report of any company?
Yes, an investor who is knowledgeable, when I mean knowledgeable, who has basic knowledge of accounting, will always do his analysis and get the very best of results. However, what they do normally is that when they do their analysis, they form an opinion and they bounce it out with an average operator in the market, that's a stockbroker, who now gives a confirmation, puts a seal on on what they have researched in, and it goes ahead with investment or divestment, as the case may be. So, if the message here is, if you are in doubt, please consult your stockbroker. He will give you an advice. But mark you, it's not all the advice of the stockbroker that must be taken as the finality.
All right. In the past, we used to hear of doctored reports, I don't know if you have more of that in recent times. Maybe you can tell us from experience. And then if instances like this happened, what should an investor do, or what should be the likely solution to this kind of situation?
Yes, doctor reports are no longer very common in Nigeria. The reason is that this time around, the government regulators, that is Securities and Exchange Commission, frowns very, very seriously at that. And one thing that you need to know is this. Now, when you doctor the report, as a director of the organization, you will be held liable for giving wrong information. And if you give wrong information and it has to impact negatively on the investor, ultimately you will be caught, the law will catch up with you. A certain punishment that goes with it. So in our Nigerian system, as we operate currently, the issue of doctor report is no longer as prominent as it used to be in the past.
All right, let's look at corporate performance. How does it affect stock market investments, the corporate performance of a company?
Yes, the corporate performance of companies, like I mentioned earlier, is supposed to come on a regular basis. Corporate performance report comes in on a quarterly basis. First quarter, second, third, and the final year of the third report. By standards, they are supposed to be presented to the stock exchange, to the investing public through the stock exchange. And when these reports come in, it is available for every investor to have access to it. And if for any reason you are not able to present it, then you must give an explanation. To go into your question, when the corporate reports come, they come handy. And when they come handy, it means that you must do your analysis based on this corporate report and form an opinion. So corporate report issuance is a compulsory thing as an investor or an issuer in our market.
Okay, as a follow-up to that, I would like you to talk about some of the specifics an investor should look for in a kind of corporate reports or to measure corporate performance. What are the details an investor needs to look for in that kind of report to ascertain the level of corporate performance and to also determine if to invest or not?
Yes, for an average investor in the market, if you're able to lay hands on a corporate report, which is usually very comprehensive, of a minimum of 45 or 47 pages, minimum. Some can even number up to 200. For an average investor, I will encourage that the first thing to look into is not the profit and loss account or the balance sheet, because these are two key things that you need to look at ultimately. However, what you need to read and study very well is the director's report, because it is compulsory for the directors to give a comprehensive report of performance in the organization. That is very important. Though it is bulky, but it's advisable that you go through it. Then after that, you go to study the profit report, the performance. After you have done that, you will find out how the company has done in terms of the revenue, and you determine what the profit has come after deducting the operational cost. Once you determine that, you look into areas that are technical, that is extraordinary income. Upon looking at that, it will determine for you or show you exactly where the company is going. Have they disposed of some key assets without you knowing? You need to find out. And when they dispose of key assets, it must be at fair value, fair value. What of the income? Has it come in? And after determining that, the next level will now be comparatives between the previous year and the current year. Is it an improvement? If it's an improvement, by what percentage has it improved? And if you determine that, you now say, okay, what is the profit level? Have they been able to give me a very good profit for this period in question? If they have, what is the payout to the shareholders, that's the owners of the company? The payout to the owners of the company will now determine how much you get as an individual on a pro rata basis. And you can now, at the same time, determine the dividend per share. Remember also that in doing all that, you as an investor is supposed to be benchmarking this return, the dividend yield or the return you get in terms of dividend against the inflationary rate in the economy. If it is far apart from each other, it therefore means that investment may not be giving you the right returns. Based on that, you can take a fair decision on your own or you consult your advisor.
All right, now you mentioned dividend. Let's talk about dividend. What is the period of time for dividend to be paid out? Does it have to be maybe after 6 months, yearly? And why is it that it takes quite a while for some investors to get dividend paid to them? For some, they've invested after maybe a year, even two, they're still finding it hard to receive dividend.
Okay, there are a few technical things that go with payment of dividend. To me, as an operator in the market, I've been able to find out that payment of dividend has become even faster and more efficient compared to the past. These days, when the dividend is declared, when companies who are doing well declare a dividend these days is paid on the day the annual general meeting is holding. Immediately after the annual general meeting, people are expected to get their alerts showing that dividend have been paid. That's the vogue now. And it is going to continue because technology has improved on a lot of things in the market. It is no longer the issue of you having to post warrants to people, sometimes getting lost in transit, and some other times being hijacked by unscrupulous elements in the system. That has been eliminated. So the only thing that can delay your dividend as a new investor is the fact that there are a few technical things that needs to be done at the back end by the investment advisor or the stockbroker, as the case may be. As soon as you invest, they are supposed to obtain what they call your sample of your signature and forward same to the registrar so that they can adopt your signature in their system. And that is followed closely by the submission of what they call e-dividend mandate form, which can be submitted through your stockbroker or your banks, that is normally submitted through the NBISS. So that is the system that is being operated now. As soon as you buy shares, ensure that a transfer form is completed on your behalf and submitted to the registrar to take record of your signature, sample of your signature. Then the next thing is to submit your e-dividend mandate. And once that is done, the registrar captures all that, you will get your dividend as when due.
The Security and Exchange Commission is launching what we call an e-dividend portal to curb the issue of unclaimed dividends. Are you optimistic this will go a long way to solve this age-long problem?
Yes, the Security and Exchange Commission has done very well in this area. They have done very well. However, you know, in an economy of this nature, there could be some element of sabotage on the part of the real operators, maybe by way of wanting to deny people early receipt of their dividends. But I believe that SEC has done what it needs to do in that wise. And maybe what to do is to ensure that once an e-dividend form is submitted and the person's BVN is stated clearly, the registrar should accept it as is and pay such dividend into the account of the requisite shareholders. And once that is done, I think all these issues of unclaimed dividend will be a thing of the past. There will still be some elements of outstanding dividends because as things go, there could be the death of a shareholder. And once there's a death of a shareholder, it tends to affect the continuous payment of such dividend into the account or any disability, as the case may be.
All right, let's look at the performance of the different companies at the stock market. It seems like perform more or have more people invest in them than other sectors. What would be the reason for this?
Come again, I didn't hear you very clearly at the initial instance. Can you come again with your question?
Okay, my question is this. Some companies in certain sectors seem to be performing very well than others in some in other sectors. We find that companies in sectors such as telecommunication, the finance sector, and oil and gas seem to be dominating the stock market. Why is this so?
Yeah, it's a simple issue. When a thing is doing very well in terms of performance, in terms of dividend payout, people tend to gravitate towards that direction. And the telecommunication industry is under the IT sector. The IT sector is doing very well all over the world. In fact, they control the market even in in the US and some other advanced economies. So you expect things like that to happen even in Nigeria. So for any investor who sees such stocks, he goes straight for them, no matter the quantity, because some of them are even highly priced. But people go even place order for 5 units of such stocks because they want to identify, because they know they will do well ultimately. For the ones in this finance sector, that's the banking sector, some of them are doing quite very well, like I mentioned some earlier. But some of them are not doing very well. And you can always explain it. Maybe the management structure is not properly in place, or maybe the funds available for working capital is not enough for them, or they may have done wrong investment that may have affected their performance in the past. So these are certain considerations that make people gravitate towards the ones that are doing very well, the likes of GT, Zenith, UBA, Access Bank, and a few others. And of late, Fidelity Bank. These ones are doing quite well. Then for the ones operating under the oil and gas sector, they are doing quite well. But you find out also that there's some level of volatility on the kind of business they are doing, based on the fact that prices keep changing on a regular basis, and these people are not able to meet up with purchases of input. When I mean input, import of petroleum products, which is also tied to exchange rate. So some in the first quarter of this year, a lot of them posted losses. So a lot of people are being a bit more cautious in dealing with such stocks. But by and large, once the economy stabilizes, they will do very well. I mean the oil and gas stocks.